right. What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Mark Dutch, welcome in, man. It's so good to see you in here. Thank you for being here, and thank you for modding for me. Yes, guys, please smash the like button if you get anything out of the stream today, any sort of insight from the market. Job Field, what's up, my man? Good to see you in here. Hump Day 2.0 stream. Let's go. Felix H, welcome in. You caught a long from 98.8. I hope you mean a short from 98.8, or a long from 87.8. I'm not sure what you mean there, but welcome in, Felix. Good to see you in here. Crypto Wanderer, welcome in. Thank you for being here. Lost X, Dad 87, Olive Frey, welcome in, guys. Lost X, don't I think everyone and their mothers would open a short from 90 if we went to 93K? Yeah, it is kind of obvious resistance. I understand that it is kind of obvious resistance, but just based off market structure and based off like Elliott waves, we could expect maybe even a little bit higher. You know, I'm going to talk about that in just a second, but if this impulse to the downside is done and we're going to see a larger three-wave corrective move up, it does make sense that we could come a little bit higher to the golden pocket or even the 786 Fibonacci. And I'll talk about that because we have some liquidity above us there. But we'll just have to see how we react within this small range that's forming here. Let's see. Yeah, so Dr. Rex, welcome in as well. Thank you for being here. R Pink, thank you for being here, and thank you for modding. TXRX, what's up, man? Hello to you. Quality Crypto. Thank you, Quality Crypto, for the comment. I appreciate that so much. And Samuel S44, welcome in, and thank you for modding. And Machi HK is in the chat. What's up, man? I do think another dump could be coming soon. We'll see if we get a relief rally. So, guys, we were looking at the rejection from 98K, really from 96.5 to about 98.5K. It was our larger range. And this range, the entire time this range was forming, I was saying it was likely to be more of a corrective range before dumping lower and even coming down to take out our 80.5K lows. And we did see a very harsh rejection at the highs of that range into the point of control of our macro range, our 2025 price action, fair value, the point of control there. And it was also your anchored VWAP. And in a downtrend, if you're going to reject from the downtrend anchored VWAP, it's an important volume resistance. When you reject, especially so strongly like this from the downtrend, it's a pretty bad, it's kind of a bearish sign, guys. And if you remember that 107K anchored VWAP, it was right in this area. And it was when we came up to back test it, and we saw the harsh rejection right here, we got the big drop to the downside. So we are getting a pretty harsh rejection from the anchored VWAP. Obviously, we're back inside the volume profile, and we've dropped all the way to the point of control of that volume profile. Now, that point of control was a very important support level. We had a weekly at 87,850-ish, but at 87,500, we had a daily level. We had a bunch of naked daily, naked weekly, naked monthly points of controls. We obviously had our 2-month range point of control there. It was very important support, and that's why I took a long from 87,500. I'm still in that long position. We also had the confirmations as we were coming down there on the charts. We had pretty nice confirmations of making those bull divs on the charts, lower lows, higher lows on the momentum waves, lower lows on the price action. Money flow was starting to bottom out and curve to the upside, and NAMI was really showing some multiple drives of nice bull divs with that money flow already crossing into the green as we were coming down to that support level. So, of course, I attempted a long on that, but I did tell you guys that I am still expecting overall more macro lower targets, and this is just a scalp long on a relief rally. And if we look at our Elliott wave count from the highs, from our $98,000 highs, we can look at it a couple different ways, but if we look at this first kind of contracting diagonal as a wave 1 here, and then we look at all of this as a wave 2, and this entire move down to the weekly was a wave 3, we got our 3-wave corrective move up in a wave 4, and then we got one last dump in a wave 5. So there is a possibility that this impulse to the downside is completed. We have our 5 waves down, hitting into some very key support. And now maybe are we going to see a bigger 3-wave corrective move up to some resistances above, but overall making a lower high before continuing the dump down. And so this is one of the possibilities that I'm looking at right now. And we still have not changed market structure bullishly because we haven't taken out that 4th wave corrective high yet. And we almost came up to take it out yesterday, at least on the Coinbase chart. We have not come up to take out that fourth wave corrective high at $90,500. So you kind of want to at least take that out and see a bullish change in market structure before we're looking for a bigger relief rally to 93K or maybe even 95K. But I want to talk about one other possibility of the impulse to the downside. And it's looking at it as a double 1-2 impulse, which I talked about earlier in the week, where all of this was a wave 1, this was a wave 2, and then we have our secondary or internal wave 1 and an internal wave 2, and this was our big third wave. Now we've gotten a 4 and a 5, so are we going to see another 4 and another 5 to come down maybe even a little bit lower and make one more low? And I still do think that is a possibility, and the reason why I think that's a possibility is because when we hit into our fourth wave corrective high yesterday, and I warned about this in the Telegram as we were coming up to this level, $90,500. If we pull a Fibonacci from the highs of wave 3 to the lows of wave 3, and this is in the case that we're counting it as a double 1-2 impulse, and we turn on those wave 4 targets, you can see we really rejected right in that zone between the 382 and the 0.5 Fibonacci, rejected right from that zone, and then we dumped down to take out those lows. And that dump down was a pretty swift, impulsive move down. And you'd have to zoom in on really low time frames to count 5 waves in here to see if there's a valid 5-wave count. But either way, it was a nice, impulsive candle to the downside. And we took out the lows, which was important, and finally hit that key support. Because this box here, this green box, was our support zone. And we did get a nice bounce from the weekly. But really, the level we were talking about was that $87,500 level. So a little bit muddy here as far as the Elliott wave count goes. It's a little bit muddy to see if we're going to see a bigger relief rally to the upside to come up to some resistance above us and then finish a dump, or if we're going to make one more low here before seeing that bigger relief rally. But within the next few days, I would expect that we are going to see some sort of relief come in. What is a little bit interesting that what happened today, and I pointed this out in yesterday's video, and I also pointed this out in the Telegram, we did have some really key internal support here at the golden pocket. If we pull it from the lows from yesterday to the kind of those bounce highs that we had, and golden pocket was here, as well as a daily level at 88,310, around 88,000, let's say $300 to $400. And on the Coinbase chart, we did come down and we did tap that level. We did tap the 618 at least, and we are getting a decent reaction right now from that level. But VWAP is trying to reject us. And remember, on it, we're in kind of a dump for the day. The intraday price action is sideways and down. So if you do come up to that VWAP and you reject here, you're going to expect to come down and at least make a new local low below the low that we just had. Now, could it be just another dump down actually to hit the daily and to hit the 0.65? And then we're going to maybe see that bigger impulse, that last impulse up to make a bigger kind of 3-wave corrective move? Sure. I don't know what's going to happen here, guys. And we want to see some volume coming in soon. If this was a wave 1 and this was a wave 2 pullback to our golden pocket area, in our wave 3, we would expect to see some big push up, or even if we're saying it's an ABC, A, B, all the way down to the golden pocket, and we're going to see a C wave coming up, 91, 93, or potentially, if we go up to 95, I would be looking at different structure. I wouldn't be looking at this as an A, B, C here. I'd be looking at this as a 1, 2. We would get a 3, 4, 5, and then we would probably have a bigger corrective move, and then another 1, 2, 3, 4, 5, showing an overall bigger ABC. But we're just going to be monitoring to see how we react here. How are we reacting? And we can look at the order flow here. And what is interesting here, you can see I have a vertical line on the chart. And throughout the night and early this morning before New York opened, we were kind of just ranging in this channel or triangle, you could say, even a kind of a triangle in here. We, had a fake out of it to the upside, took out some very local highs, and then we saw that big dump. But on that big dump, you can see when we started to break out of the triangle, a lot of people longed right into that dump. So if we look at right when we were breaking out of that triangle, a lot of pattern traders were saying, oh yeah, of course, this is a bull flag. It's a symmetrical triangle. It's a bull flag. Flat pole, here's your pennant here, and we're breaking out. So we're going to pump up really high, especially because we hit a decent support level. We get that fake out, and then a lot of longs. Look at right at that area. We had a lot of fresh positions open. And if we look at our CVD, almost all those positions were long positions. So we saw a lot of fresh long positions step in on the failed breakout, or the, the kind of the trap of the breakout of that pennant. And then we dumped pretty aggressively. And there was some news that was coming out right around this time as well. PCE, what was it? Core PCE price index. And that was nothing big. It was a nothing burger. It was there was no forecast because it was delayed last time, but it was pretty much what was expected. Previous actual, no change there. So nothing too big happened there. And I wouldn't say it was a huge determiner of the volatility, but we did get that dump to the downside afterwards. And with that dump to the downside, you had those fresh longs longing right into that resistance there. And so, of course, if you start to drop too much, those people are going to get stopped out or liquidated. And that's when we start to see a little bit of a short squeeze pushing in. But now, even after coming down to your golden pocket, you could see once we came down and hit that 618 of the golden pocket, we saw it's not a whole lot of longs. It's more equally balanced, or CVD is kind of flat here. But we did see some fresh longs coming in on that higher low backtest of the golden pocket. So depending on what happens here, and you can see on this drop now, our open interest is starting to decrease here, because we could see that long squeeze down where all those late longers, if we start to drop too much, we could squeeze them down and we could actually break down probably to make new lows. So a little bit, we have to be patient here and wait very locally, internally. We have to wait to see what happens here. And, guys, if you didn't catch the long from this box of support, like whether it was when you reclaimed 87,500, that's what I waited for, because we pierced down below. I had an alert set. As soon as we reclaimed it, I longed it. I think it's 87,511 is my position, or my entry. And if you didn't long down here, first of all, we are in a more macro downtrend. So we are counter trend trading. Even by trying to long at a really good support like this, we're counter trend trading. But knowing that we could be coming towards the end of an Elliott wave, and with the bullish divergences we saw on the chart, I had the confidence to at least take the attempt. But if you didn't long down here, I would say this could be a decent level, and I did talk about that, but I'm not even comfortable. Like when we came down here today, I was looking at the charts as we were coming down here, and I didn't add to my long position. I'm still long from 87,500, and if we start to break market structure here, come up a little bit higher, I plan to take some profit, because we could just be seeing a bigger dump to the downside. We have to remember that our overall more macro price action here on the daily time frame, we were expecting a larger complex correction, a WXY correction, to come up to that resistance. And if we did see a harsh rejection with impulsive moves down, then it's likely that we are actually going to see eventually new lows coming in below 80.5K. And so, and we'd want to see an impulse like this on the daily time frame, which of course would take some time. It would take maybe a month, or even 6 weeks to 2 months to play out. But within this impulse, you're going to see ebbs and flows. It's a 5-wave move, and you're going to see relief rallies up to certain resistances before seeing new legs down. So knowing that, we can scalp long our nice support levels if we have confirmation on the chart to take it up to a higher low. And that's just what I'm attempting with this trade here. But if we do, so local levels to look at. So I'm just scalp trading right now. Of course, I was still short from $97,200 when we rejected the golden pocket. If we pulled this first drop, we had our golden pocket right up here in confluence with the back test of that anchored VWAP. So when we came up to right around 90,000, 97.2-ish, I did short that bearish back test of the golden pocket there. But I told you guys I'd taken already 2 TPs. The second TP was when we hit the value area high here. And so I wanted to re-add to that short position. So when we did come up to $90,500, I compounded, and I let you guys know that in the Telegram yesterday, based off of this being a 3-wave corrective move and coming up to that zone between 382 and the 0.5. And yeah, it did drop my entry a lot. Like my average entry now is way, way lower because I had taken out 85% of the short. But I'm not here to show you guys. I'm not here to brag about catching the top on this. I'm here to make money. So if I can compound a short, and I did, I compounded the short here, and I told you guys I'm going to take profit if we hit $87,500. So I compounded the short here, and I took profit on pretty much everything I compounded right down at $87,500. And that trade is still open. I still have about 30% of the entire position still open short. And if we do see a relief rally, by the way, guys, in the next few days, I will look to compound again and look for a bigger drop because I am expecting overall some more bearishness to come into the markets. As we were coming up on that daily time frame to that key resistance above $98,000 resistance, we confirmed some high time frame bear divs on the chart, bearish divergences on the chart, money flow bear divs on NAMI on the chart. So to me, this does tell me that this could just be the start of a much bigger drop to the downside. All right, let me check the chat here, see what you guys are up to. Welcome in, everybody. I hope you guys are all having a good day today. Hope you guys were able to catch some of the positions this past week. I think we've had some really good trading within this range, within this overall 2-month range. But it's likely that we could be seeing an end to this soon. Maybe in the next couple of weeks to a month, we could be seeing an end to this. And of course, we do have some uncertainty in the macroeconomics, and that always does play a factor into things. If you guys were around in 2022 and 2021, when there was uncertainty in the macro economy, it really did affect, especially risk on assets like Bitcoin. And we're also seeing it being highly affected with gold and silver. So we do have to be aware that there is some uncertainty in the market and some catalysts that could cause volatility. With Bitcoin and crypto being a risk on asset, we might see that drop to the downside from that. All right, let's see here. Yeah, relief is important. I agree, Samuel S. I do think relief is important. Let's see. Anyone can take a scalp short with a recent sweep of local highs. Market Cipher B looks like it could be setting up for some bull divs on its medium time frames. Yeah, we did have, as we were coming down to $87,500, we definitely had some bull divs. And if we take the lows again into like that $86,000 support, we would have some very nice drives of bull divs forming. If this, it's a kind of a quick move down and this bottoms out here, and then our money flow would be coming up, it'd actually give us some nicer bull divs, in my opinion. And $86,000 is a key area that I'm looking at. So remember when we were trading over the holidays, first of all, not a lot of people trade between like Christmas Eve and New Year's through New Year's. And even that like first couple days of January when it was a weekend, you have very low volume trading. A lot of people are focused on holidays, family, or they've kind of rebalanced their portfolios, closed out their trades for the year and waiting for next year to start. So this was in that time. You can see December 24th was that $86,000, 350 low. And throughout that week between Christmas and New Year's, we created a very nice liquidity trail of these higher lows, just barely higher lows on the chart. So we have built up a lot of liquidity down into that $86,300 area of support. Now, if we go on to our liquidation heat map and I just zoom out to the past month of price action and we look at that liquidity, let me go to the Model 3 here. Okay, you can see that coming down into that $86,000 area is where the majority of the liquidity is below us. I mean, there's nothing else really close by. It's definitely acting as a magnet to pull us down there. So for me, and also because think in terms of volume profile trading or market auction theory, we attempted to break out of this range. We failed and rejected from a macro resistance above, and we fell back inside the range. So yes, you expect a bounce from the POC, especially if you're testing it for the first time. But if we do make a lower high, and a good spot to do it would be at the back test of that value area high, and you reject that, then you're likely to come down to fill that volume profile, which you could see the value area low is pretty much right into grabbing all that liquidity at $86,000, at $86,300. So it makes sense to me that we could see that continue, this range continue for maybe another couple weeks. We'll maybe see a relief rally for a few days or a week, and then a bit of a dump here to take that liquidity. And if you guys were with me on the channel and the live streams during that holiday week, I was so surprised that we made all these higher lows and didn't take the liquidity before seeing this pump here. Like I was actually shocked that the market makers pumped it up without taking that liquidity. So, we have a lot down there that is just really juicy to be taken. And the market moves, I say the two most important things to look at in the market for price action is liquidity and volume levels. So, of course, rejected from a very key volume level of resistance at the top of the range. We took out the range highs. Now, are we going to at least come down and take out that liquidity at 86K? Okay, Nicole, welcome in. Nicole Nielsen, welcome in. Mr. Moon, welcome in as well. Turn up the mic. Okay, yes, thank you. Is this better, guys? Let me know. Is this better? I just missed since the past midnight in my time zone. Well, Mr. Moon, I'm sorry that it's past midnight in your time zone. They're recorded, and I know it's better to catch it live, but thank you for at least joining when you can. And I hope you do get a chance to rewatch those so you can get the information if you want to. Good day, Divine Hood. What are your thoughts on this local range since Tuesday, looking like a Wyckoff spring incoming? Okay, since Tuesday. So you're talking about just this lower range. Let me zoom in onto the hourly chart. Yeah, since Tuesday. Well, okay. If you're looking at it as a spring like this, we're looking at just this range here. Let's actually pull the volume profile for that, and let's look at this, because that is a little micro range that we're trading within. I mean, yeah, it's being respected. You can see we keep rejecting the value area high. We fall to the value area low, wick past it just a little bit to hit the golden pocket, and now we're trying to push up to test that POC right now. But as far as Wyckoff accumulation here, I mean, yeah, we could be seeing that. And that is also, whether you, with Wyckoff, you're looking for 3 taps. Like, so you have a tap 1, you have a tap 2, and then generally in a model 2 accumulation, you'll make that higher low and it's a tap 3, and it kind of looks like that inverse head and shoulder, that bottoming reversal pattern. And that's a very common pattern, especially on a lower time frame. After seeing an impulse finish, it makes total sense that we would see that. And maybe this accumulation occurs through the weekend, and then we start to make a rise next week. But I would want to see if that is going to be the case. Well, we did see what we want to see at the bottom, the bull divs at the bottom, into a real nice level of support. We would want to see that breakout and that retest relatively soon. And then on that retest, we would expect some nice expansion to the upside. So if that's the case, we could be looking at even this, let's say tap 1, tap 2, tap 3 here. You're going to break out and expand. We would still be looking at some sort of corrective move in this expansion to make a lower high before making a lower low. That's one of the possibilities we'd have to look at. And the reason why is because this push down from 98K to 87.5K is a very high probability impulsive structure. Whether you want to count it as a single 1-2 impulse or a double 1-2 impulse, this is a very, very high probability impulsive structure. So when you reject from macro range highs, macro resistance, and you have impulses to the downside, now what we're looking for, if you have a 5-wave move down, you're looking for a 3-wave corrective move up, followed by maybe more continuation of a 5-wave move down. Now, if you get another 3-wave corrective move up, you're going to still look for impulses down. Until you can change that pattern, you're looking for more downside overall. So because this was highly likely to be an impulse, I am expecting a very high probability of a lower high coming in before continuing down and breaking down past those lows. And if it is accumulation that's occurring, yeah, we can just still look at the same resistances, whether you're looking at this in terms of Wyckoff accumulation or you're looking at this in terms of Elliott waves or just volume profile trading. Bounce from the POC, maybe are we going to come up to test the value area high? Whatever strategy you use to look at this bounce, we should be at least focused on those local resistances to either compound short positions or to at least look for short positions if we have confirmation on the chart. So let's just say that this impulse is done here. We're going to pull our golden pocket Fibonacci from the highs of the impulse to the lows of the impulse. And you can see the golden pockets coming in 93.8 to 94.2, let's say. It is a pretty important support resistance flip. If we just look at kind of this general area in here, nice little support resistance flip. Let me just fix that. In this general area, resistance in here, support in here. So if we do come up, that's going to be a nice little support resistance flip as well as a golden pocket. But I pointed this out in yesterday's video. I actually like the 0.5 Fibonacci better because it is pretty much in perfect confluence with that value area high. And then we also do have a naked daily point of control in there. Let me throw that on the chart. We do have a naked daily point of control right around 93K as well. So this zone in here, we have some nice confluence. And just above it, we could even wick past it to take out these local highs in here, that liquidity within this area. If we're looking at like the 4-hour chart, it is So we do have like a little nice order block in here as well. So while we're here on the 4-hour, I do want to talk about overall, we still haven't seen bull divs on the 4-hour chart. And if we're going to see a nice big bounce from here, I would want to at least see some sort of bull divs on intermediate timeframes, 4-hour, 6-hour, 8-hour. But because we're seeing only 1 hour, 2-hour and under bear divs or bull divs, excuse me, I'm looking also for a lackluster move to the upside before overall dropping. Also, our money flow. Look at how bearish our money flow is looking here on Market Cypher B. Still coming out aggressively on the 4-hour. And we did print a hidden bear div signal at the highs, at those corrective wave 4 highs yesterday. So in a hidden bear div signal is a continuation pattern. Now, I understand we did get that continuation to the downside. So in some ways, this hidden bear div has already played out by taking out the weekly lows or the lows at the weekly level. But we're just going to play the range, guys. If we zoom out to the 8-hour chart, 8-hour chart, money flow is just crossing into the red here on Market Cypher B. And we did have the very, very slight bear divs on the weekly or on the money flow. You can see on the money flow, they're very slight, but it is bear divs on money flow. Now, we did not get the momentum bear divs. It's more like equal highs in here. And NAMI did get very, very slight bear divs. I mean, like very slight bear divs. But look at where NAMI got the money flow bear divs as well. And yes, it has bottomed out. We have seen some green dots. Money flow looks like it's trying to come up a bit on NAMI, but that could give us our little bit of a relief rally or our 3-wave corrective move before continuing that drop there. Okay, let me continue with the chat here. Yeah, also rejected the local GP. Are you talking about very, very locally? Let's see. Maybe are you talking about this thing here? Yeah. I mean, we're just kind of chopping guys right now, attempting to break above that VWAP again. So that was kind of good that we are now making another attempt on low time frames to break above that VWAP. Got a small rejection. Now we're coming up again. So let's see if we do see a move up. But I would want to see us take out these $90,500 highs. Because if we can take out those highs, technically it would be a change in market structure on like the hourly time frame and above. And then that's when we could, even if we get a bit of a pullback, we could be looking for at least one more wave to the upside to make that bigger 3-wave corrective move. Jesus Save 77, welcome in, man. God bless you. Much love, and thank you for being here. If we can't even get above 90.5K, we are not going to hit the 786, let alone the 0.5. Yeah, that's a good point. That's a good point. But we're still just ranging. And, you know, at this, like, just like, at a lot of these more big support levels, this was a pretty big support level. You expect some sort of range to form or like a rounded bottom to form. Of course, you want to get that last low into the actually hitting the support level. But this is common to see actually at a kind of more macro support level. It's common to see a little bit of chop around here because you generally don't see this actually where you go straight up and straight down like this. You generally see a range. And actually, even up here at $98,000, we kind of got that pierce up, and then we got this kind of range that formed for a day or so before we ended up kind of continuing the overall move to the downside. Now we've got the nice confirmations for the bull divs. If we can change market structure, then we could even see a pullback. I would be expecting a higher low before making a higher high, and that would give us some that nice corrective move that we're looking for. We would want to analyze the volume on this corrective move and then see how, you know, of course you want to wait for resistances to be hit, whether that's Fibonacci targets, volume levels targets like value area highs, naked dailies or dailies. But either way, I'd be waiting until we get to resistances and of course liquidity grabs. I mean, there's a possibility that we could range between 87,500 and 91,000-ish over the weekend. So yeah, could we come up here, pierce that, SFP it, and then come all the way back down, maybe to the value area low of this range when it forms? Sure, we absolutely could. Yeah, here. Okay, Chad P, welcome in, man. And absolutely, man, I appreciate you being here as much as you appreciate me sharing. So thank you. And Andrew, welcome in as well. Good to see you in here. Anthony Lee Crypto, the dump was from the jobs report. Yeah, and GDP. Both were bearish for risk on. Okay. So yeah, guys, within the day, like within the weeks and the days, you're going to have high volatility and high impact volatility events that occur, news events, and they will cause short-term volatility, especially if it's a bearish thing for like risk on assets. And you will see a little bit of traders play that. So of course you could see a sell-off because traders are shorting it or closing long positions out on the bearish news. But you will see a little bit of reactions from news, but that doesn't mean the overall premise is going to change. It's usually technically going to happen anyways. It's just the news generally speeds up what's happening or makes it a little bit more volatile. What was like technically probable to happen anyways. Okay, Time Attack, welcome in, man. Thank you for being here. Thank you for modding. Man, I really got to catch up on this chat. Should be bullish around April. CJ, yeah. CJ, welcome in, by the way, man. Bullish around April. Yeah, it's going to be interesting, guys, because if we were looking at that trend-based Fibonacci time, I do think that we could go all the way until, God, when was that? Let me see here. Let me zoom out to the daily time frame. And I want to look at that trend-based time, fib time. Yeah, I mean, let's see. This is going to be in February, and the 618 is what I was really interested in. So yeah, that's late May. I think we could be, and you know, we do have this thing sell in May and walk away, but when you actually look at it, about half the Mays are bullish and half of them are bearish. So there is this kind of sell in May, walk away stigma type out there, stereotype, but it's not always the case. So I'm going to be looking at some of these key fib targets. Like you can see right when we came down to the 382, which is generally your minimum time target for a corrective move, we made that low at 80.5K, pretty much right on that thing. And we're seeing a relief rally. But I still don't, once again, I do not think the $80,500 low was the ultimate low. I do think it's highly, highly probable that we do eventually come down and make new lows. Now, whether those new lows are going to be a larger kind of three-wave WXY correction before dropping down and taking, you know, maybe even taking out 74K, or if we are looking at still an impulse from the all-time highs being a wave 1 here, a wave 2 here, wave 3 here, a wave 4 here, and then we're going to come down in a fifth wave and take out those 80.5K lows. It doesn't really matter which one we're looking at. Ultimately, I am still looking at lower targets before like those ultimate swing long positions can come in. Of course, it matters as far as your intraday scalp trades or your even, you know, midterm trades, day trades, week-long trades, stuff like that. Divine, does the relief rally have to happen? Elliott Wave suggests it should happen, but does it really have to? So yes, Lost X, there after an impulse finishes, there is always a corrective move. Like it happens every time. But here's the thing, you can get a giant impulse to the downside and your corrective move could be a flat correction at the very bottom of the impulse, like almost like a range, or like you could consider this if you're talking about Wyckoff, like a redistribution, and then you could drop straight away. So the corrective move can be a very small flat correction at the bottom of the impulse, but generally you will see some sort of corrective move. I mean, not generally, it happens. It does happen. There's multiple types of corrections. You know, after an impulse, you can get that sharp zigzag correction, and that's usually where you get that three-wave move up to the golden pocket. You can get even sort of flat corrections that come in. Now, you know, in a flat correction, you'll have your A wave up, you'll have a B wave. Usually the B wave takes out the lows of the A wave, and then you can have your C wave, which will take out the highs of the A wave, and then you could, you know, finish dumping. So there's many types of corrections, but yeah, it is almost guaranteed that you have a correction. I don't know the statistics on that. That's why I'm being hesitant to say always. But I mean, Elliott waves have been studied for hundreds of years, and if you kind of talk about that with every major expert out there, they will tell you that after a impulse, there always is a correction. Okay, Rokina 1, welcome in, and thank you for being here. Yeah, guys, please hit the like button. Also, thank you, Mark Dutch, for posting the affiliate link in the chat. Really quickly, while I'm here, I just want to take a minute to cover the partners of the channel. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need to sign up is an email and a password. And if you do sign up using my affiliate link in the description below, You can get a minimum of 20% discounts on trading fees and earn up to 40% discounts if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in those futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, you can get a 50% deposit bonus, which is the highest I've seen on $100. And then, of course, various 20%, 10% deposit bonuses here. Also, BYDFI, really quickly, I want to talk about BYDFI is doing this new, and this is going to be an ongoing thing. So it goes for about 2 weeks and then it resets. But they're doing this new trade and earn program, and they're actually giving you guys real Bitcoin. Other exchanges will give you guys, I guess, credits or, not actually real crypto. And this is where you can actually earn real crypto. And depending on your trading volume in here, you can earn real Bitcoin. And they're giving up to $10,000 worth of real Bitcoin. So if you're trading on the exchange, this is an opportunity for you to earn extra on top of your trades, on top of your discounts on the trading fees. So I thought that was really cool that they're doing this for the community. Just wanted to let you guys know about this. Of course, if you guys want to pause it and read the rules down here, there are some rules on this, like, only taker trading volume is considered, rewards distributed after the event ends. But it's really cool that they're actually doing this. So I really appreciate them going the extra mile there. Okay, lastly with BYDFI, I did start a Telegram community with them. It's a private community, but it is free to get into. All you need to do to get into the community is sign up with BYDFI using my affiliate link in the description and then deposit $100 into the exchange. That $100 is your money. You're just using the exchange to trade on. And you can get the discounts on the trading fees. You can get the 50% deposit bonus if you do KYC. So that Telegram community is where I post throughout the day. Like I posted the shorts, I posted the long from yesterday on Bitcoin at $87,500. Also posted that short from $90,500. If you're interested in joining the Telegram community, all you need to do is sign up, deposit the $100. Once you've done that, there's a Telegram link in the description of this video. Click that Telegram link. Once you're in the Telegram channel, type in /verify and then your user ID, which is going to be right up here. It's probably going to be a string of letters and numbers for you guys, but /verify and your user ID, and you're in the Telegram. And then once you're in, guys. There's multiple channels within the Telegram. I have my channel where it's kind of a read-only channel where I post my thoughts on the market, trade setups for you guys. But there's a generals tab where you can tag me. You can ask me questions about the market or price action, ask me questions about a certain altcoin. And there's many other great traders in there. They're all communicating with each other to kind of figure out the best trades. So great community we're building there. A lot of you guys already are in there. I see you guys in there on a daily basis. Appreciate you guys being in there with me. And I do think it's a win-win for everyone. Okay, second partner of the channel is NAMI Trading. NAMI is this momentum and money flow indicator down below Market Cipher B. And for me, I use it as confirmations on my trades. So I am not, just because I see a bear div on the indicator doesn't mean I'm taking a short as soon as the bear div confirms. I'm waiting till we get to my key marked out levels where I plan trades, right? We were planning a short between $96,500 and $98,500 because it was our point of control in our anchored VWAP. But as we get up here, we were pushing up here relatively explosive. And you say, wait a second, how do I know it's going to reject there? How do I know it's not just going to keep going? Well, this is when you can come down to your indicators and you can look for confirmations. And if you're seeing bearish divergences and bearish money flow on the chart as you're coming up into that key resistance, it kind of gives me that trigger to enter the position. So for me, it's been a very great and invaluable tool to help me get into good trades with confidence and to stay out of bad trades. Also, to know when to take profit. Like as we were coming down to this support level down here, we had bull divs on the chart on the 2 hour and under. Okay, I'm going to take some profit just in case we bounce. And sure enough, we're starting to bounce. So I have partnered with NAMI to give you guys a 50% off discount code. If you do use my affiliate link in the description, and then Divine50 is the discount code to type in the promotion box, you guys can get 50% off that. Lastly, the last two partners of the channel are MEXC and Bybit. Both great exchanges, both offering discounts on trading fees, and Bybit's offering up to $30,000 in futures trading bonuses. MEXC is offering up to 10% cash back on your initial deposit up to $1,000. Okay, let me get back to the chat. Let me get a drink of water here too real quick, guys. My throat is kind of getting dry on me. So give me just a second and we'll keep going here. All right. Yeah, Time Attack, welcome in, man, and thank you. 110 watching, only 40 likes. Guys, if you do get any sort of insight from this live stream today, learn anything like that, please do hit the like button for me. I'm trying to grow this community for all of us so we can develop a good community of traders that actually support each other, kind of cooperate with each other, and try to scrape money away from the market makers. Man, that's what I like, you know. Yeshwant, much love to you and welcome in. Decrypto, good afternoon to you as well, and welcome in. CD Dingle, what's up, man? Good to see you in here. And Massey33 as well. It's been a while, Massey. I know, but thank you for being here, and welcome in as always. All right, let's see, 89,683.1, also a naked daily point of control. Let's see, let me zoom out to the 1 hour, and we'll look at some of those naked dailies here. 89,000. Yeah, well, that's today's naked daily. So, or at least on Coinbase, it's 89,922 right now, but it's not confirmed yet because the daily candle hasn't closed. Now, that doesn't mean we can't still reject from it because it is still kind of your daily volume level of resistance, your point of control on the day, even though it hasn't confirmed. It was very easy to find out, draw an Elliott wave from the lower high next to the all-time high, then Fibonacci each drop, and you'll find out all of the corrections and potential market shifts. So you're saying on larger time frames here, I'm not sure. So other than 90, let me see, what did you say? Oh, from the all-time high. Yeah. Oop. So that first drop, now this is going to change depending on what exchange you use, though, because Coinbase only dropped to 107, but some of the other exchanges dropped a much lower. You know, we had Bybit drop all the way to like 102. So I get what you're saying there. You're going to pull your fib. You're going to look at your Fibonacci retrace from those levels. I don't know if it looks like Bybit didn't quite come up to that area. Let's see. Coinbase. Did Coinbase come up to that area? Probably Coinbase did. But yeah, you're looking right. You changed market structure. So guys, market structure is king. And whatever you're looking at here, okay, there, actually, we would want to probably pull it down to this guy here. Market structure is king. And what you're looking at is when you break market structure bearishly. So like this was a last major low, this kind of low right in here. And so we broke it, right, on October 10th. That means because we pierced down below it, we broke market structure bearishly. Now, because we broke market structure bearishly, we're looking for a lower high on the charts before potentially making another lower low. And you're continuing bearish market structure. So now the trend is your friend, right? Now you're looking potentially for another lower high before looking for another lower low. And you're going to continue with that trend until you see a bullish break in market structure. Now, does that mean if you're probably not going to catch the absolute bottom because you don't have confirmation if you're just trading off market structure? And it depends on also what time frame market structure you're going with, because even in here, we broke some local market structure bullishly by taking out this high, and then you can come down and make a higher low. But I would say market structure is a very, very important tool to look at and to utilize. So yeah, CJ, really awesome, man. I think it's crucial to understand market structure, guys. Do you think we were in the big bear down for a year or so? So Tara Toman, that is a question that's a very complex question. But essentially, I think it's a high probability that we are going into it or that we're very, very close to it. And I want to justify my answer there because first off, let me even zoom out to the monthly. First off, on the monthly time frame, which is a very high time frame, from our all-time highs after the breakout, or after the BlackRock listing, this is after institutional money got in, right? And the ETFs were confirmed. This was in late or early 2024, right? Towards the end of 2025, early 2024. We created a pretty significant high there and retraced for about 8 months in a sideways and down range. But from that high in 2024, a new all-time high, breaking above your previous all-time highs, we have now created 1, 2, 3, or even 4. You know, you could say this is all one here, but pretty much 3 to 4 new all-time highs. And we are creating bearish divergences as we keep making those new highs, and money flow's been draining out on the monthly time frame for almost all of 2025. It's been draining out. You can see on NAMI here, it's even clearer. one drive of bear divs, two drives of bear divs. So you have a triple drive, two separate drives, a triple drive bear div, and the money flow has been steadily draining out as the year has been progressing, right? From 2024's all-time high. So we have high time frame bear divs. The last time we had super high time frame bear divs on the chart with money flow draining out, we went into a bear market. Also, that's on the monthly time frame. But let's zoom in on the weekly time frame and let's look at the weekly time frame, because if you go onto the weekly time frame, you have a triple drive of bear divs as well. You can see very clearly 1, 2, 3 drives, money flow kind of draining out as that whole, especially as the 2025 range was forming all year. You had money flow bear divs and bear divs confirm as the range was forming. And I've shown you guys this many times on the channel, especially with Market Cipher B. This is where Market Cipher B shines because it's a little bit slower than NAMI. So if you're forming a sideways range, no matter what time frame this range is on, if you're forming a sideways range, you've created new highs within the range, confirming bearish divergences. And as that range is forming, your money flow is steadily draining out as the range is forming. It makes this range far more likely to be a distribution range. And then you dump in distribution to the downside. So on the weekly time frame, weekly triple drive bearish divs, we have even locally within these 3 highs, you can see on NAMI, weekly bear divs, triple drives, money flow bear divs. I mean, we have so many macro bearish signals that show that the top could be in. So yeah, I do tend to lean more towards we are about to go into a bear market, but we had diminishing returns as far as our pumpage to the upside in the bull market. So do we see a diminishing return on the dumpage in the bear market? And I do think that's possible that we could see, not as an aggressive bear market. We might only drop to, mid 50s or even, taking out 49K. We'll have to see. Of course, it's going to depend on how this first big leg and breakdown of this range is. If we do break this range down, we're going to have to see how that plays out, and that will give us a lot more information. But yes, I definitely think potentially we're lower. Now, another example, guys, of those distribution ranges. So I was just showing you that we could be on the weekly time frame in a big distribution range. All of this on the weekly time frame. Weekly bear divs as money flow has been draining out of the asset. But if you want to see an example of where that played out, at the beginning of the year, when we made our new all-time high in early, at the end of last year or beginning of this year as well, as this sideways range was forming in here, we confirmed bear divs on the daily time frame, multiple drives. First of all, there was bear divs forming within this leg here, gave us a little push down to take out the range lows. Then we came up and took out the range highs. Another drive of bear div, but look at this. Money flow was draining out as the entire range was forming. As soon as it crosses into the red, distribution, right? So that is, and then also in this range up here, the next all-time high range, bear divs confirmed. Money flow actually started draining out at the beginning of the range for me, but you can see as the range was developing, money flow was draining out, and it lasted a little bit longer. As soon as we really got into the red, started dumping, get into the red, you dump and you distribute. So on the weekly time frame, if we go back to that weekly time frame real quick, it is just highly concerning technical wise, it is highly concerning to see these bear divs within this sideways range here. And money flow is just about to cross into the red. I think we could probably get maybe another rally. I think actually within this leg down, I don't think we're done yet, but we might bounce from like taking out 74K, take that liquidity at 74K, or maybe even come down to 70K where that macro golden pocket is. Let me just grab that real quick. And I don't want to spend too much time on this because I want to cover some altcoins. I want to cover some trades today, but this is kind of important. Let's fix that. So you can see if we turn on our macro logarithmic golden pocket, and we're turning it on log scale because that's more than a 100% pump from 49K to 130, 126. That's more than 100% pump. So you have your log golden pocket. And if we do continue this impulsive structure down, breaking 74K or even potentially coming down to 70K, it would be a bearish break in market structure on the weekly time frame by taking out that 74K low. Now, after that, yeah, this is very, very strong support, 70K to 68K. So we might see a bounce all the way up to your golden pocket, and you would have to pull that golden pocket from the all-time highs. Let's just put it right at 70K, and let's make sure that's on log scale. Yep. So we might see a bounce all the way back up to like 101 to 103K from 70K. And then guess what? That could be also your lower high, because we created a lower low here. So you have a higher probability of putting in a lower high before creating another lower low and starting that bigger downtrend. But in terms, and then think of it in terms of distribution. Like I said, this looks like a distribution range that could be in the making because money flows draining with bear divs as the range is forming, right? So if we bounce from 70K, we could come all the way up to 103K, and this could take 6 months or so, but we could still make that lower high before ultimately dumping, and that would be your model 2 distribution, right? You have your big tap 1 here, your tap 2 here, your tap 3 here, or whether you want to call that a head and shoulders. If you're a pattern trader, you can simplify it by calling it a head and shoulders, right? Your left shoulder here, head here, right shoulder here, topping reversal pattern, bear dips confirmed, break down, and expansion to the downside. Okay, I wait for bull div on daily. Okay, so Dread Mining, welcome in, man. Good to see you in here. I'm simply analysis on the exchange you're using. I use MEXC. Okay, I do swings, so it's clear structure. Okay, yeah, definitely, CJ. And, you know, if you're doing analysis on MEXC because you use it, I totally agree with that, man. Mind Tapestry, welcome in. Good to see your stream at this time. Hope you're well. Yeah, I am. Natural gas finally paid up. Okay, short 470. I remember you talking about this. Yeah, let's look at this because remember I asked you to let me know and we could check what let's see, was this the one that wasn't the chart? I forget what chart I used on this. I do not remember what chart we were using for this, but yeah, we were looking at that. We were definitely looking at that. Let's see, maybe it was this one. Yeah, there we go. All right. Wow. Yeah, we pushed up, but we did. Let's see on the daily time frame. So we did come a little bit past that golden pocket. That's kind of where we were looking at, right under the golden pocket. So golden pocket, you had some naked weeklies, naked dailies down here. So we did wick a little bit further. We didn't fill this gap though. That's interesting that we didn't fill this gap. We came and bounced from the top of the gap, it looks like. But once again, look at like this looks like a pretty clear 3-wave corrective move overall on the daily time frame, making a higher low, and now we're impulsing up and making a higher high. And then overall, your market structure was kind of bullish, you know, coming into that. So now I think you said you just finally it paid off. Let's see, what did you say? Short 470 to 350. Okay. Wow. Well, that's good. You know, at 330 really was kind of where we were looking for support, but look at where we bounced, the channel midline. This is the channel midline. So let me get rid of some of this stuff on here to clean up the chart, and we can zoom out and look at that channel. Now I wonder if you longed, then long to 540. Okay. Yes. To 540. Okay. Wow. So you've already taken profit on that. It was probably taking out these prior highs, a little bit higher than those prior highs. That very nice, man. Very, very nice. But on the, let's go to the 3-day time frame here. So we have a big kind of sideways range, and actually let's just zoom out to the weekly. Yeah. I mean, it goes back, you know, gosh, almost 2 decades, but you kind of have your sideways structure in here, you know, bounce from the bottom of the range. And now are we going to see a move to the top of the range? We could absolutely see a move to the top of the range, and we are still in bullish market structure breaking out. But look at what was important here within this last year or so. You broke above the midline. We just back tested it on that drop that we saw. You 3-wave corrective move down, another push up to take out your highs, and then within this we saw a 3-wave corrective move down, hit the midline, and now we're testing the midline as support, and because of that, so highly likely we could work our way up to the top of this kind of sideways range that we're seeing, which is going to be around $6.10 or so. Let's check out our Fibonacci's in here, and let's make sure. Yeah, log scale. Okay, and then where are you at? Well, we did hit the golden pocket already. So this golden pocket was hit back in December, at the very beginning of December. So you still are in that general area of the golden pocket resistance, but it's already kind of been used up with that December hit. Man, I would say this looks pretty bullish here. To probably keep going at least up to take. I mean, you have a nice weekly level right up here in between that 786 and those range highs. So I would say you're probably going to continue up to, like 610 to 675 ish. Overall, I'm not saying it's going to be another straight green week like this. Like, this is highly unusual. If we look back in the past years on this thing, yeah, that's a very big bullish weekly candle. But you have a green dot on the weekly. Money flows coming up with a green dot. Momentum wave bottomed out on NAMI on the weekly. 2-day chart here. Yeah, money flow rising, 2-day chart. It's crossing back into the green on the 2-day chart. So we're likely to see continuation here as long as you don't start to lose those prior highs. You really want to hold above these prior highs now. And you kind of want to continue this impulse up locally. But yeah, very, very bullish market structure there. Let's see here. I mean, you are starting to create some bear divs, some pretty big bear divs here on the chart. You can see those bear divs, money flow bear divs on the chart. I would say you really don't want to lose. If you start to lose the golden pocket again, if you start to lose like 492 again, you're going to be in some trouble. But let's get back to the charts, crypto and stuff. Is the 382 at 91.3 a good area to short as the end of the relief corrective rally wave up? So yes, on Bitcoin, I was actually looking at that this morning, Lost X. That 382 Fibonacci, if we just remember, the 382 rejects you in a strong trend. So 91 300-ish, that 382. And there's a reason why I was looking at this. Not only because you have some liquidity that's resting right around that area. You can see this liquidity up here resting right around that area. But if we go on to our liquidation heat map, and let me just go to the past week of price action, you're going to see that we have some very interesting liquidity. So that liquidity is coming up, I guess it's closer to $94,000 where your golden pocket's going to be. 94,000 or okay, wait. So sorry. Let me go to the last 3 days of price action, and you'll see that we do have a liquidity pocket there right above it up into like 91,000 and 91,300. So some very strong liquidity just above us there coming up into that 91K area. So yeah, it's possible we could reject from there. Now, I mean, this was a pretty strong support, guys. And generally, if this is the end of an impulse to the downside, the most common targets on a relief rally on a B wave, let's just say, you could count this two ways, right? You could count this entire move down. Let me just zoom out so it's more clear for you guys. But we rejected a very key resistance. So we could count this entire move down as a wave one or an A wave, right? So we don't know if it's going to be overall corrective or impulsive. In an A wave, you're still looking for impulsive move. Let me just kind of do this to clear up some confusion. So if we're looking at this as an A, a B, and a C to come down, maybe to take out 86K or come down to take out 83K or even 80K. In a ABC correction, within your A wave, you're still looking for a 5-wave impulse down. It's the same with your C wave. You're still looking for a 5-wave impulse down. Now, that is in some ways a bullish scenario, right? Because you would be kind of not breaking 80.5K and you would continue pushing up. But in a larger impulsive move down, you would be looking at a bigger 5-wave impulse to the downside. A wave one could be all of this. Now your wave two generally retraces between the 0.5 and the 0.786, with your golden pocket being the most common area, especially for a wave two. Golden pocket, most common area. And then you get a big 3, and then a 4, and then a 5. You get continuation down. And within that impulse, I would expect to break our 80.5K lows. So, you'd see something like this where you're taking out those lows. And this would be kind of flat too and sideways. So, but either way, that relief rally there generally you do like to retrace between the 0.5 and the 786, whether it's a B wave or a 2 wave here. 382 is still a valid target. It's just an uncommon target. And if that's the case, if we do come up and reject from the 382, then I would be expecting a harsh move down because the 382 rejects you in a strong trend. I would say so far this has been a pretty strong trend. So we'll just have to see as we're getting up there. But I would say a little bit better would be that confluence of resistance up near the value area high. All right. Yeah, we'll take a look at Solana. Guys, I did skip some of the stuff in the chats. Let's see here. Let me just kind of go through this really quickly here. Tara Totem, thank you for the comment, man. I appreciate that. Okay, we'll look at TRX. We'll look at Solana. Let's go to Solana real quick, and then we'll go to TRX. So Solana, guys, has been trading so technically nice. And I know Jaffiel, you're in here. Jaffiel switched from trading Super for years to trading Solana, and he sees now how technical Solana is. Solana's been one of my favorite altcoins to trade because it is so technically nice to trade. The levels are highly, highly respected, and also the moves tend to be pretty nice on Solana. So Solana, we've been focusing on primarily this range over the past 2.5 months, 2.5, 3 months, or 2 to 2.5 months. This bottoming range here. This bottoming range was after we made a new all-time high. So first, I want to kind of cover this from the macro scale to the more lower time frames. So we obviously had a giant impulse on Solana all the way up to, $200 plus. New all-time highs back in March of 2024, or not new all-time highs, but new all-time highs in January of 2025, obviously. But we did see this as impulsive price action. I mean, definitely impulsive price action. But since March of 2024, you can see we're in a larger weekly sideways range. Now, there is two scenarios. This could be really bearish for Solana, where we're forming a weekly distribution range up here, right? Like a left shoulder or a tap 1, head or a tap 2, right shoulder or a tap 3. That's your topping reversal pattern, where if this is going to be distribution on the weekly, we expect to see a pretty harsh breakdown and at least come to 75, but maybe even all the way down to 33, 31, 30, in the 30s. Now, do I think that's likely? No. If we do break this down, I would like to see like the mid 70s hold, or even coming down like the 50s, these prior highs in here, 50s, resistance in here, kind of support in here. But we could be seeing a weekly distribution range. So we have to be aware of that, because we did have bear divs on the weekly time frame into the all-time high in a tap 2. And as this range is forming, just like I showed you guys on Bitcoin, as this range is forming on the weekly time frame, bear divs confirmed, money flow draining out of the range, draining out of the asset as the range is forming, crossing into the red. You can see here, crossing into the red within the last couple of weeks here. So there is a possibility we could see much further downside if we are going into a bear market with Bitcoin. I expect this to distribute to the downside on Solana. But now if we zoom in and we're let's just put our bull glasses on and let's say, you know what, this is going to be reaccumulation, right? So you pump up, you have your expansion phase, and then you can see something called reaccumulation, where the whales are buying when they get to the lows of the accumulation zone, and then it's going to continue pushing up higher. So, sort of like a super cycle type of thing, or just bullish continuation because the asset is bullish, right? So within this upper range, let me hide this. Within this upper range, we're looking at this, or actually, I'm not going to hide that yet. So this is our range we're looking at, our volume profile. You can see that we are down, and let me just get rid of some of this here. We are down at the value area low of our volume profile, trying to hold it, and we've been here for about 2.5 to 3 months, bouncing around between the point of control. Let me zoom into the 2-day chart, and you can see at the bottom of our macro volume profile, value area low, we're at the point of the value area low, and we keep rejecting from the point of control. So what we want to pay attention to as traders is we want to analyze this range here and what's about to happen here, because this could be a great possibility for swing longs to take up to 200K or even new all-time highs if it's going to be really bullish. Or at the very least, if it doesn't hold, we could see a breakdown to take out the range lows or even come much, much lower. So, but within this range, I want to see accumulation because I'm a bull on Solana. I like Solana. I think Solana is a great asset. I have spot Solana. This is also where you would expect to see after what a 60% dump or whatever this was. Let's see here. This was a 54% dump. After a 54% dump to the downside, you will start to see if it's going to remain bullish overall, you'll start to see what's called an accumulation pattern happen. Accumulation at the bottom. You'll have accumulation, and then you have your expansion to the upside. So what we would want to see is we're analyzing this range to see what are the important levels for swing trades within that range. And so now we can zoom in here on the 4-day time frame. For me, this range has paid me super, super handsomely. So I'm going to hide our macro range now. Just know this. The highs of this range are right at that macro POC. The lows of the range are at the macro value area low. So now what we can do is we can analyze this sideways range, and you're going to pull your volume profile of that sideways range. You're going to look at your key levels within the volume profile, your key volume levels, high volume nodes, but you're also going to look at liquidity within that range. So we did come down and we made a new low. We grabbed all the liquidity from the lows, had some bull divs down here locally. We had some bull divs and we pushed up. Now this push up that we've been looking at from the range lows, we've been looking at an impulse, a wave 1, a wave 2, wave 3, wave 4, wave 5. And I was saying this, all this entire push up, I was saying, guys, it's likely we come take out the liquidity of your range highs. The best level to swing short would be at $147 to $150, right? Because if we're going to look at continuing bearish market structure, right? Because this was a lower high, lower low, lower high, lower low. So we're in bearish market structure. And if we pull a Fibonacci from those last major lower highs to our lows, and we turn on our golden pocket. Now, wait, you're going to say, wait, Divine Hood, the golden pocket's at 150. Why is yours a little bit lower? Well, this was a 32% dump to the downside. And remember, if it's more than a 30% dump to the downside, you want to shift your Fibonacci based off log scale. It's a 32% dump to the downside. So you're going to click this, you're going to come into Fibs based off log scale, and that's going to shift it to the proper 61% retracement. Remember, 61.8% is a psychological level ingrained in our psyches, in our minds, in nature. It's an important level, 61.8%. So now it shifted our golden pocket to the proper spot. We had the range high liquidity right up there. So we had a liquidity grab right into a very key golden pocket. And before we were even coming up here, I was telling you guys this was a zone I was looking to swing short. And I told you guys I was looking to swing short it down to about $125 to $123. And we got that short played out perfectly. But I also told you guys that because this could be possible accumulation, a tap 1 here, tap 2 here, this could be a tap 3 in here, or whether you want to call that a left shoulder, head, right shoulder, inverse head and shoulders that's about to break out and push to the upside. Either way, I told you guys I was looking for a hedge swing long potentially in this area. So I'm still short. I've taken out a lot of profit on my short from that short up there, and I got in a little bit late. I got in around 146. But now I did long 125.3 when we tapped into it the first day. What was that? Tuesday. Yesterday, I closed it out, but I got it back in at about 125.7. And so, and I think we could even make another new local low, but I am long, and I'm looking now at holding this as a potential swing long. We can look at this structure down. Wave 1, wave 2, wave 3, wave 4. Do we need one more low? Because to me, it looks like we need one more low in here. And the macro value area low of that big weekly volume profile, the value area low is coming in at 123.16 at the bottom of this guy here. At 125, we had a lot of support. So I was expecting at least some sort of bounce from 125. We had a naked weekly point of control. We had a weekly level. We had a daily level. And we had a naked daily point of control. Pretty much all at 125. But we have our macro 786 Fibonacci pull at 123.67, I think it was. Let's see, 786, 123.69. It has not been tapped yet. And we have our macro value area low at 123.16. So around $123. or let's just say $123.2, we still have some important support just below us. And there is a potential that where our impulse to the downside is not done. Wave 1, wave 2, wave 3, wave 4. Could we get another drop down in a wave 5? And so I'm potentially looking for another low to come in. And that's why yesterday in the Telegram, I posted to you guys, if we come up to around 132 to 135, I am going to take some profit just in case we're going to get another low. And there is a couple ways we could look at counting this structure as well. You could look for some double 1-2s in here because technically this was the high. So you could say 1, 2, 1, 2, and then all of this is your 3. This is a 4. Now we're going to need a couple more 4 5s. Or you could say all of this was just a wave 1. This was our wave 2. This is our wave 3, our wave 4, and then we're going to get a wave 5. So if we're pulling our Fibonacci from the highs of wave 3 to the lows of wave 3, and we're turning on those wave 4 targets between 132 and 135 is where we could reject in a wave 4. Now, remember, your wave 4 move, you generally want it to be longer or as long as your wave 2 move, right? So we could be seeing something like this to come up either to the 382 or to come up to the 0.5 Fibonacci, where I really like that 0.5 because we have some nice liquidity resting right up there into that 135 level, where then we could now see one more 1, 2, 3, 4, 5 impulse to the downside to take out those lows and actually hit the value area low. So I am long, but I'm looking at potentially one more low on Solana. I'm looking for a potential short at 132.6 or 135. And I'll take profit the second we take out these lows. I would take profit on it. I would take at least 75% profit. Now, I'll leave some open just in case we're going to get that weekly distribution in that bear market scenario. But I'm also already short from much higher, so it would be a compounded short to take out the lows, just like I did with Bitcoin. I shorted 97.2, and then I compounded it at 90.5, and I took profit at 87.5. But Solana's trading so nice and so technically, and Solana has really good opportunities because if you shorted this short at 150, 148 could turn into something that drops all the way into the mid 70s or even lower, right? So you want to hold some of this open just in case we start to distribute on the weekly time frame. On the other hand, if we're in accumulation on the daily time frame, and this is our third tap or like our right shoulder of an accumulation, this thing could really start to break up to $200 or more, or at least break up. If we see expansion, you want to break the highs of these range and you want to see continuation, like explosive continuation to the upside. So this could be an ultimate swing long opportunity down here between 125 and 123. So I do want to see us kind of come down one more time lower because the way I'm at least looking at this Elliott wave count here, 1, 2, 3, 4, 5, it makes sense to me that we could get one more low. But on that one more low, you bet I'll be looking for longs. You bet I'll be looking for swing longs. And on that, if we do make another low into the value area low at 123, and we have another drive of bull divs on the chart, more bull divs on the chart as we're coming down to that low, gosh, I am going to be probably risking 2 to 3% of my portfolio, not 1%. I'm going to be looking for swing longs, heavy swing longs there. Of course, calculated risk always ahead of time, and plan the trade ahead of time. And then, of course, if I say we do come down there in a wave 5, because this was a 1, 2, 3, 4, 5, because it started with an impulse down, we would have to be careful for a 3-wave corrective move to the golden pocket before dropping lower. So, of course, when we start to get up to our macro golden pocket, I would at least take some profit just to be safe, to lock in some profits, because there is a probability. So, and you could see that golden pocket would be right into that macro POC at 138, not the macro POC, but your range POC at like 139. So we would just have to see how that's going to play out. But I mean, Solana's been so nicely trading on these intermediate time frames that it's been such a moneymaker, and I love what's happening here. Now, on the lower time frames, of course, we did hit that 125 level. We hit the naked weekly, we hit the daily, we hit the weekly, naked weekly point of control, and we're ranging sideways. We're starting to form this sideways range in here. But if we pull our golden pocket from the lows to the highs that we saw yesterday, you can see our golden pocket was coming in at 127.3. right where we had a fresh naked daily point of control. It's no longer naked because we just came down and hit it earlier today. But I was actually looking for a bounce here. And guys, I did add to my long position on the bounce here because I wanted to get in a little bit better. I entered in here because I took some profit when we started dumping up here on Bitcoin dumped. And I told you guys in the Telegram, guys, I'm taking some profit. And then once we got down to like 127, I was almost certain we were going to make a new low. So I just closed it out. And I said, I'll be happy with the profits I got on that. But we started to bounce. And then so I was like, you know what? I just in case it's swing long, I have to get in. Stop will go below the low. I forgot where I was going. But as we were coming down to this golden pocket, it was also a naked daily point of control. And just like Bitcoin had an internal support level of the golden pocket and a daily level down here, Solana had its nice little internal support of a naked daily point of control in the golden pocket. So what I did is as Bitcoin earlier today, as Solana was coming down here, Solana had hit into this golden pocket way before Bitcoin hit its daily level in golden pocket. Like Bitcoin was still ways away. And so I waited, and then it was kind of chopping around down here. And then Bitcoin finally came down and started to bounce from the golden pocket. And then as soon as we recovered this, I entered. As soon as we started to recover, I entered above 127.5. I think it was like 127.6-ish. I entered. So I compounded that long a little bit, which brought my overall average entry a little bit higher, but my stop is now going to be resting below this low. If I get, and if we start to take out this high into the 382, I will consider taking profit if we start to reject from the 382. But that's about it for Solana, guys. We are bouncing here. I don't like how this was a higher low. It would have been so much nicer to see a 3-wave corrective move here, and then like Bitcoin did, dump down to take out the low. Because on Bitcoin, what did we see? We saw a nice 3-wave corrective move, and then the dump all the way down to take out that low. And it gave us another drive of bull divs. It gave us really nice play. Solana did not take out that low, and I do not like how Solana did not take out that low. So could we be ranging in a sideways range in here where we are going to come down again and take out the low? First of all, based off of the Elliott impulse to the downside, I think eventually we are going to come down to take out that low. It's just, are we going to come up to 132 or 135 first? And we're just going to have to see as more data develops on the charts, whether we're going to come up to these levels first and then reject, or whether we're going to kind of drop down first and make a new low. And if we make a new low first, let's say we do drop down, make a new low first, I probably won't be looking at taking so much profit in this area anymore. I'll be looking to hold it up much higher. Okay. Let me get a drink of water, guys. Yeah, remember Solana at $9? Dude, I was buying Solana at $16. And I remember it was in 2022. And I was telling everybody, please, guys, like my friends and family, Solana's under $20. Please consider buying some. And only a couple people listened to me. And then, of course, when it was above 200, they asked me if I should get in now. And I was like, guys, no, don't get in now. Yes, Tiki Taku, it does disturb me that it didn't make a new low. Benny Blanco from the Bronx. That's an awesome name, man. Thank you for the comment, man. I appreciate it. I'm not the best speaker, and I do mince my words up and stutter a lot, but I just try to get my point across to you guys. So appreciate you guys putting up with it and being here and everything. I just try to get my information across the best I can to you guys. In my opinion, that depends on Bitcoin. If we continue down with Bitcoin, yes, ZMX, I agree 100% with you. If Bitcoin is about to drop to 70K, I do think that Solana is not going to hold 123 or even like $100. I think it's going to drop much lower. All right. All shitcoins like ETH, Sol mainly follow BTC. Yeah. GearBQ, you're right. BTC is like, in some ways, even more powerful than the S&P 500. If Bitcoin is dumping, the altcoins are going to dump too, for the most part. Like, it's a very strong correlation. All right, guys. Yes, please hit the like button. I'm going to go into, what was that? TRX. It's called a super liquidation cycle. 3 peaks in a dome. Yeah, you know what? Absolutely, Massey 33. Okay, where was that coin? I think it was TRX. Uh, TRX. Okay. Let's see if I've done anything on this. Yeah, it looks like I've looked at it before, but so man, okay, I wonder if this is an old golden pocket. This is not an old golden pocket. So this golden pocket has not been hit yet. Let me make sure that's on log scale. It's not on log scale. So from your last weekly low to the highs, that's what this golden pocket is going to be at 25 cents pretty much. And then let's just get rid of all this internal stuff that's played out. Looks like we did reject from that golden pocket. So we made a high. Then we came down and made a low. And then we came up to the golden pocket, and it was also a weekly level. We were looking right here for a possible rejection. We're getting it. So now, could we be in a triangle in here? That is something that could happen. We could be in some sort of triangle that's forming here. High time frame. We have seen this on altcoins before. So let me channel. This channel was a base channel down here. We broke out of the base channel. So we still haven't touched the bottom of the base channel. So that's good. I do like this support level down below us. So it looks like we have a fresh weekly level at 26 cents. We have the base of the channel at 26 cents. We have some liquidity at like 26 cents and then into your golden pocket at 25 cents. So that actually is looking like a really nice level. Let me make sure if this is less than 100%, we'll take that off log scale. Okay, that is only 84%, so that should have been off log scale. So yeah, 26 cents, guys. 26 cents is a very key support level on TRX, on a high time frame support level. Like this could be a really nice long position if we come down there. At least a day trade to, possible swing trade long. And then let's now come in here on the weekly. I just want to mark out some key weekly time frame resistances. So we'll mark out this guy. Weekly, and then I want to look, that weekly's been tapped right there. Let's mark out that monthly. Oop. Yeah, on the daily time frame, I would say we should be looking at, and I know this chart is messy, guys, so please excuse that, all the stuff in here. Let's do this. Let's mark a box here, and this is our very key support level, okay? That is what we really want to be paying attention to. If we come down there, that could be a nice long position. But I want to focus primarily on kind of this sideways range that's in the making here. So I'm going to pull that range starting after the impulse ended, even at right after the high. So I know some people will just grab that high and bring it over, and let's see if it even makes a difference. So there's your volume profile, and then let's now take that volume profile and let's just drag it a little bit over. Yeah, pretty much. Doesn't make a difference pretty much at all. The value area high shifts very, very slightly, but really it's the value area low and POC, which are going to be important if we start to crash anyways. So I'm going to go with this one because technically we're measuring a range. This pump up was part of the impulse. All right, so it looks like what is happening is, and I know this chart is super freaking messy. Let me hide this channel for a second. We are attempting to break out of the value area high again. But what sucked here is you bounce from the value area low. You kind of, work your way up. You flip the value area high to support. You flip it to support again, and you work up to the golden pocket. That was that macro lower high golden pocket. Now, because we did reject a lower high golden pocket, there is a possibility we could put in a lower low below this guy here, right? So there is a possibility we could come sub 20 cents on this thing. But for now, we're going to analyze kind of this range in here, the sideways range that we're seeing. And I will say this, let's pull now our golden pocket from the range lows to those lower highs. Yeah, okay, that's that golden pocket, same golden pocket. Man, and even I would even look at pulling this sideways range because you can kind of see how this was kind of a range down here, and then we broke up, kind of flipped those range highs to support, and so this is kind of a new range that's forming up here. So we probably want to pay attention to this new range more than the whole entire bigger range, and actually look at, like, this is very nice. Value area lows right into our key support. Your POC, you're bouncing from that area, and we're trying to come up to that value area high right now, which is also, I believe, let's see if that's a fresh naked weekly point of control. I'm going to zoom in to the 4 hours so we can get a better look here. Yeah, and we do have a fresh naked weekly point of control up there. Right above us. And it looks like a fresh naked weekly point of control right next to this weekly as well. Let's mark out our naked monthly in this guy. All right, we're tapping the naked monthly right now. I would expect it's a zone. It's a zone between the monthly and the weekly. So we are definitely at resistance, but I'd like if we would come up and grab this liquidity right here. So let me turn this off, and I want to show you guys. Right, this liquidity right up in here, because we're so close to it, it would be nice to take out that liquidity. We are holding this POC down here, and the value area high, it would even be nice to take out this liquidity into the value area high. But knowing we could see a bit of a rejection pretty much right now from the naked monthly, or like even a little, yeah, we're dumping pretty aggressively here the past couple days. But overall, on the low time frames, or on this low here, we did take out liquidity, so we had a liquidity grab on the low. Very, very nice liquidity grab. Kind of shallow, in my opinion. I don't like how shallow that is, but liquidity grab, and now we're starting to push up and look what looks like impulsive price action, right? So from this low, we have there is a problem counting this as a three-wave structure, but man, and it does look like a three-wave structure. Maybe we could say this is an A wave, this is a B flat, this is your C wave, but your C wave didn't even take out the highs here. So it would be a running flat. That's a tough one, actually, guys. That's a really tough one. You would have to look at this, because this definitely looks like a three-wave corrective move. And then, but this definitely looks impulsive in here. So that's going to be why I'm saying that, because if you want to count this as a wave 1, wave 2, wave 3, wave 4, and then a wave 5, you can't start this out with a three-wave corrective move. Your wave 1 has to be an impulsive structure in here. So there is a problem with that count. And I'm sure, like, we could probably still pull our Fibonacci from the lows to the highs and look at our wave 4 targets. Yeah, I mean, I don't like that being a three-wave corrective move in there. All right, let's look. Let me just go back to the daily real quick. We'll just mark out some levels then. We'll mark out some levels that are of interest. I can see right on top of our naked weekly point of control, we have a fresh daily level as well that has not been hit yet. So a daily level right at a naked weekly point of control just above us, man, that's looking juicy there. Like and now we have a liquidity grab from a weekend high. This is a weekend high. And remember, weekend highs often get taken out. Sunday high right there into a naked weekly and a daily level at 32.2. That would be really nice to see. And then as far as kind of our bounce that we're seeing right now, let's pull our Fibonacci. Yeah, and you're bouncing around the 0.5 Fibonacci. So from the low, to the high. You're bouncing around that 0.5. It's also your kind of your prior highs in here. It's actually an important support resistance flip. If we just look at this general area right in here, you can see, let me just make that our support resistance flip line, red line. It was kind of resistance here, support, 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 resistance, resistance. Now coming down to its kind of support. I mean, you can put this down a little bit lower. I would say like in this zone. So it's an important support resistance flip, but I would expect money flow still looks pretty good here. You are developing some pretty aggressive bear divs on the daily time frame. Not on Market Cipher B though. NAMI is starting to develop some pretty aggressive bear divs. With Market Cipher B's money flow still looking pretty good, and now NAMI has actually crossed back into the green here on money flow with a green dot on the low. I mean, the one thing that we would be looking at here is I would even pull my Fibonacci from that high last on the weekend to the low we made today or yesterday, excuse me, golden pocket. So I would be looking at this golden pocket for a potential rejection. What we could be seeing here is a bigger three-wave corrective move. Three-wave here. You could get a three-wave down, and then you could get another three-wave up, seeing some sort of complex WXY correction. But we don't, I guess for me, we don't have enough data for me to say that comfortably. And of course, we had our small range down here as well, and we're broke out of that range. So that's nice to see. Let's actually pull that volume profile here. Yeah, breaking out of that range, you can see we even kind of back tested that range, broke out of it, back tested the value area high. We continued pushing up here. I would expect us to come up to at least hit the daily, if not grab the liquidity and maybe even get to the all-time high. Not all-time high, value area high, excuse me. And the reason why is because we're bouncing from that POC. You can see very clearly here we're bouncing from the POC. So if you bounce strongly from that POC, you expect to kind of come up to that value area high. I would be paying attention to 32.2. I mean, if we SFP the weekend high into that resistance and start to reject, I would be looking for a potential short because we do have bear divs on the daily. And maybe by the time we get up there, we could see some bear divs on NAMI as well, or Market Cipher B as well. Some bear divs there. Let me do one more thing here. Ooh, okay. I'm going to grab these major pivots. Now, this is the COVID low. So this is going to be like that multi-cycle pitchfork. So the COVID lows up to your prior bull market highs, down to your prior bear market lows, and we're going to turn that on skiff pitchfork. Yeah, I mean it's pretty nicely respected there. I front running it a bit in here, but you can see we're working on flipping that low, the band. It was acting as resistance all through here, and now we've broken above it, and we're working on holding it as support. Fallen below it, so now I would look at where that resistance is at. So we'll zoom in onto the daily. Yeah, okay, so a couple key levels of resistance. I mean, because this naked weekly point of control in confluence with this weekly, remember we marked both of these out earlier. That is definitely going to be a resistance area. Your pitchfork band is there as well. So strong resistance up there at what is that? 33.7 to 34.2, let's say. Very strong resistance. And I still think the resistance right above us at 32.2 is strong resistance. Below us, 26 cents, man. 26 cents is really, really nice. It's also the value area low of your range. And if we do reject at this level, or even fake out of that daily, or fake out of the value area high, or I mean, come up to the value area high. If we reject this value area high and start to drop, we could drop all the way back down to the value area low. All right, and then let's pull that Fibonacci from the highs to the lows. And I want to check this. Is that 27% drop? Okay. Yeah, man, this is tough. I mean, there's a lot of levels to be looking at here because your golden pocket's kind of in a shitty spot. I'm just going to, it's close to 30%. I'm going to see if I put that on log scale. Yeah, your golden pocket's going to be at that value area high. So what I would say here is if you do not SFP the Sunday highs into this naked weekly and daily and reject, then you are going to come up to 32.83, right? So we're either going to do locally, we can either come up here, SFP into that, and if we start to reject, I would definitely look for a short on that SFP. But if we don't SFP, then, kind of chop around up here, see a range form up here. I would expect it to continue a little bit higher to hit the value area high in that golden pocket. And then I would be looking for potential shorts up there as well. So a little bit confusing here because we have strong resistances close together. Strong resistance here, strong resistance here, strong resistance here. Money flow looks pretty good. Let's zoom in onto the 4 hour. Let's see how that looks. Money flow is looking pretty good on the 4 hour. You are printing a hidden bear div, which is continuation signal. So that means we could make a lower high before making a lower low. But your money flow is just crossing into the green here. And honestly, that bullish money flow is going to overpower. And actually, never mind. That hidden bear div was a prior hidden bear div. It's already played out. It was from this guy here. But it was invalidated because of the push up afterwards. Yeah, 1 hour even looks pretty good. Money flow crossing into the green on Market Cipher B. Hidden bull div printed on this low here on NAMI. And money flow pretty green there. So no bear divs yet on NAMI on the 1 hour. So at least locally, this bounce that we're seeing from yesterday, I would expect it to come a little bit higher. I would expect it to at least come up to the golden pocket, but let's see if we have any naked daily points of control within that area. Okay, so you're going to have a naked daily. It's going to be around your 786. So that's probably the better resistance. It's actually exactly on the 786. So if you're looking for a lower high, 3155 might be a pretty good level, at least a scalp short level. You could get a little scalp off of this. This naked daily point of control in perfect confluence with your 786. Because we could still be doing something like this where we see a kind of three-wave corrective move down to hit that golden pocket that was below us before even coming up here, here, or here. Let me check the chat. I'm sorry, guys. I spent a lot of time on this one. Quiles, welcome in, man. Good to see you here. Travie Trades, what's up, dude? Losing our upward channel for the day. Bearish test going on Biddy. Okay. Caesar Coco, definitely, man. Absolutely. Drumhop TV, welcome in. Time to see if the local bear divs are going to follow through. Yeah, on Bitcoin. Let's go back to Bitcoin here real quick, guys. Local bear divs on Bitcoin. Oh, yeah. So I see what channel kind of you're talking about, I think. So we bounced from that golden pocket and we're kind of forming a little intraday channel in here. I would even pull it like something like that. Your little intraday channel. So depending on how you pull this, you could also pull this to this low right here. And in that case, you are losing it. I mean, you do have some bear divs on the 6 minute. No bear divs on the 12 minute. NAMI is showing bear divs on the 15, but Market Cipher's not. So Bull divs on the 1 minute here. I think that so let me go to the 5 minute, and I just want to talk about this real quick. This is just developed during the live stream, but like you could see a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. So if this little small, very micro impulse is done, we're going to expect a 3-wave corrective move down to the golden pocket. And then you could see another kind of push up. And I would actually want to take out 90.5. So let's see if we, just like intraday time frame, we bounce from our golden pocket. That's going to be coming in around 88,950 to 88,900. And you would be grabbing that liquidity right down here as well. So that could be a level of interest to kind of look at for an internal bounce. But honestly, guys, what's happening right here is nothing compared to what we're kind of looking at. 87.5K was a pretty big support level, and we want to break above 90.5. We want to start to change market structure bullishly. If we can do that, I think we're going to move up at least to 92.6 to 93K. If we can't, we're going to dump down, and we're probably going to dump down to 86.3, where your value area low and your liquidity grab is. It's close. Mighty iffy. Money flow, though, on the 1 minute. Okay, wait. 1 minute money flow. Yeah, it's starting to curve up, though. I mean, it's starting to curve up here on the 1 minute, and you do have the bull divs on the 1 minute, and you can see Nami's money flow is about to cross into the green on the 1 minute. So yeah, you might see a small bounce. What I like 1 minute time frame. Watch for, because we're potentially breaking the channel down. Watch for that on the 1 minute. Okay. Yeah, I'm sorry. I spent too long on Tron, guys. I'm sorry about that. Can you check BTC? Yep. Bearish backtest rejecting 786. All right. I'm sorry, guys. I did not mean to spend so much time. I got a little bit caught up there. Well, I would look at from this high to this low. Yeah, we're rejecting that golden pocket area, golden pocket 786-ish area. I mean, like I said earlier, we could be seeing that, if this is a push up here, impulsive. First of all, we didn't break market structure. That's kind of a strike against that. You would kind of wanted to break that, but we could be seeing this 3-wave corrective move down and actually hit that daily in that golden pocket before breaking market structure. So that's your hope you'd want to see, is that it's going to be a 3-wave move down, break that, and then you break up here. But either way, I just don't like the way this didn't break the highs. And so now we could be looking at a larger, even if it comes down again here, we could be looking at a larger 3-wave corrective move, right? This is the push up, all of this coming down even a second time to that daily level, and then a push up in a C wave. Just doesn't look the most bullish here. And by the way, I didn't think it was. When I longed this, I knew I was going to be taking profit at a lower high. Have I ever seen the new coin River? I have not seen a River. I'm not sure. Mind Tapestry, what is that coin about? Waiting for the 50% dump on BTC, Samuel. Man, if we do get a 50% dump on BTC, I'll be trying to buy that dump, towards the end of it, once I start to see some exhaustion come in. I haven't gone over Sui. I'll go over Sui. I'm not going to spend a lot of time on these guys. I don't want to spend 15 minutes on the coins again, but I do have to go in about 10 minutes. I got to pick up my kiddo. Okay, let me see here. Let me just go to the daily. I want to just check River very quickly for Mind Tapestry. We'll go over Sui very, very quickly, and then we can go to Bitcoin again. Okay, Sui. Oh, River. Okay, we have covered this. Actually, yeah, we were looking at this, remember, as a wave 1, wave 2, wave 3, wave 4, wave 5 could be still in process here on River. Because we did kind of reject that 1.618, saw a corrective move down. And then so now what we're going to be looking at here is let's go to the 2-hour chart. So within your fifth wave, see, in this, wow, okay, so this could all be your push up in a wave 1. This is a flat correction for a wave 2. We're in our wave 3, and then you would look for, even after this dump here, you would look for a small 4 and then a 5. But that would finish your overall bigger 5-wave impulse, right? A 1, 2, 3, 4, and then this is all your fifth wave. So it looks like your fifth wave's not done yet. You're kind of looking for that fifth wave to end. But this thing is looking bullish compared to some of the other coins. And I don't know what this is, but I mean, that's a pretty nice move up so far. You are starting to develop bear divs, though. Be careful on this thing. And you are in your fifth wave. You're in your fifth and final wave to the upside. So I wouldn't be looking for longs. Money flow looks very bullish on the daily time frame on both NAMI and Market Cipher B. But like if you're looking for longs, make sure you're taking it as a scalp long, and you're like, if you break market structure, get out of the trade, right? Like, or so for instance, if you come down to VWAP here and you're going to long VWAP, I would probably like look for the long on VWAP. Stop going below a local break in market structure. And then I would be looking, to take it up. And gosh, you're in all-time high territory. So at least on this chart you are. The only thing I can think to look at, and I don't like using these listing lows. Like, the thing is with this is a listing low, and if you wanted to pull a pitchfork here, it's just a bit dangerous to use that listing low for the pitchfork. And we'd be looking at like a modified skiff or an original pitchfork, because we're looking for this very big impulse to the upside. So let's actually just go original here. Yeah, and oh, jeez. Be careful, guys, because we are at like looking like it could start to chop around the top here. We might actually be due for a little bit of a dump, because this pitchfork, even though it's from the listing low, this thing has been highly respected. If you look at this pitchfork, you flip the lower band to support, flip the lower band to support, work your way up to the midline, kind of flip that to support. Upper band rejected, you come down to the midline, chop around the midline, and now we're coming up to the top here. So just be careful. Like I said, in the fifth wave, you're still probably looking for a pullback in a 4 and then another 5. But I would watch for something else like this, and look, like, around $70, $69, $70. I would be looking for a potential drop here. So it's interesting, and it looks bullish. Money flow on the daily looks bullish, but you are coming up into some significant resistance. SUI, guys. SUI is dumping back inside the volume profile. So this is our 2-month-long range on SUI, right? And we kind of we had an established range. Like, these are kind of your range highs, your range lows down here. And we attempted to break out of that range, and we formed what's called a failed auction up here. We formed a failed auction range, and then we dumped back in our volume profile. Now, we've dumped back in our volume profile, and we're below the golden pocket. So if you pull the golden pocket from the range lows to our range highs, we are losing the golden pocket, which was also in confluence with your POC. That to me is a bad sign. Now, yes, we are bouncing from the 786, but I would be aware of something like this, where you bounce from the 786, make that 3-wave corrective move, and now reject from that general area before potentially filling it to the bottom and coming down and filling and taking out some liquidity here. So just be careful with that. Let's check out. Actually, let me go to the daily. Yeah, and you do have a fresh daily level down there. Let's see, dailies. I like the daily level at 136 better, because it's right at, first of all, we'll be taking out this liquidity, and it's into the value area low. So 136.2, that daily level looks pretty good. No weeklies in there. No weeklies. Yeah, and you're hitting you did hit a naked daily point of control yesterday. Sorry, excuse me, a naked weekly point of control yesterday. So that's where we're bouncing from. Nice. hit that naked weekly, bounce perfectly from that naked weekly point of control. So I'm going to delete that now. 786, you're bouncing from your naked weekly into 786. I would really be careful here, guys. Look for that 3-wave corrective move coming up to the POC or even up to backtest the pitchfork band. Oh, yeah. Okay. So I actually really like that. This naked daily point of control is right where that pitchfork band is, and that's the backtest of the golden pocket after you lost it. So what we could be looking at, because remember we were looking at this, and I made a short on this, a wave 1, wave 2, internal 1, internal 2. We got the big 3 here, but unfortunately we failed. We invalidated it by hitting our wave 3 golden pocket. So now we actually have to say this is more likely to be a 3-wave corrective move, with like your C wave being an explosive blow off top C wave. And there is a probability that this is going to be a 1, 2, 3, 4, 5, probably even to come take out the lows of the impulse or the lows of the corrective move, the lows of the range. That doesn't mean you're going to do it with this impulse. You could see this impulse finish coming down to take out this liquidity or into the value area low. You could then see a bigger corrective move before then finally coming down to take that out, the range lows out. But it does, unfortunately, look like, and even if we're going to look at a bigger, because this is actually the range low right here. Bigger 3-wave corrective move, and now you would expect to come down and take that out on macro timeframes. So I would actually be looking at that 157.7 naked daily point of control in confluence with the backtest of the pitchfork band as a potential area to look for a short. And then we can even pull our Fibonacci here from the highs of 3 to the lows of 3. Let's turn on those wave 4 targets. Okay, those are a bit higher. I also do like that 0.5 because it is at the value area high and it's at the top of the pitchfork band. Now that's pretty aggressive move up, but this could be a nice little resistance area right up in here. 0.5 Fibonacci, value area high, pitchfork band, and we probably have no naked dailies in there. No naked weeklies. But you would also, because this structure in here is a fair value gap. Like there's no support in there. So if you start to come up through it, so if you do start to break one, if you don't reject here, then, and if you can get back inside the pitchfork band, you're probably going to bust through all of this really quickly because there's nothing in here to keep you from busting through it really quickly. So I would expect to kind of bust through it and come up to that general area. God, I don't even like this though. You see, actually we could call all of this a contracting diagonal in a wave 1, or you'd have to say, because this is a 3-wave move, 1, 2, 3. So you can't say this is a wave 1, this is a wave 2. So actually, that Fibonacci pull right here is wrong. Oh, geez, this is just, yeah. You could count on lower time frames. Actually, we go to the 1 hour. In here, you could be looking at a 1, 2, 3, a sideways 4, and then a 5. Did you take it out? No, you didn't. Yeah, there's an issue with that count. But I would be looking, you are starting to form a bottoming range, an exhaustive range right in here. But now our pitchfork band and our POC and our naked daily is kind of acting as resistance. So just be aware if you come up to around that area, you could reject and make another new low. You did have some nice bull divs, though. I have to say this. Nice bull divs forming. Yeah, bull divs forming. Formed, I should say. Okay, I should mention, use VMC, Cypher B plus divergences, so my chat be slightly different. Okay, Drumhop TV, I think you asked a question. The volume on the move up has been weak as well. Yeah, on Bitcoin, it definitely has. It definitely looks corrective so far. Let's see. The normal Swede, welcome in, man. I am literally just about to get off here because I got to leave soon. But thank you for joining today, man. I'm sorry that you're coming in as I'm taking off, but it's really good to see you in here, and much love to you as well. Uh, yeah, River, man. River was looking good. I don't know what it is, but it's pushing right now. But remember, we're at that pitchfork resistance right now. And yes, you could make a couple more new, like one more new high, because within your fifth wave, it looks like you're not done with it. But I would just be looking for a pullback 69.72 cents, in that area. Let me check Bitcoin real quick, guys. Let's see what's happening here. I mean, nothing's really happening right now. The things to watch for is we could make another little low into that daily in that 7/8, or excuse me, 0.65 at 88,300-ish. And like this could be, but this is really bad that we didn't break market structure bullishly. So you could be looking at a little 3-wave corrective move in here before continuing that push up. Money flow starting to roll over here. I personally wouldn't be surprised if we do roll over and make one more low. Because remember, we still have a 1, 2, 1, 2. If this is a 3, this was your 4, this was a 5, and then you now need another 4 and then another 5. And you don't want to take out this high in that second 4. And someone asked me about this in the Telegram earlier today. So if the double 1, 2 is still, this is still a probability. It has not been invalidated because we haven't taken out 90,500. Your first initial wave 4 highs, your primary wave 4 highs. Now we're looking for a secondary wave 4. So this could be a secondary wave 4 in the 4 and 5 in the making. So it's going to depend on, I mean, if we start to lose 88.3, I honestly think we're going to come down lower. If you lose 88,300, it's very likely we take out these lows. It's very likely we probably come down to take the liquidity at $86,350 into your value area low. And if that happens, I'll just look to re-enter. Now, I don't know why this box. Oh, let's see. Where was our golden pocket? Man, okay. I mean, your golden pocket's a little bit higher than your value area low in that liquidity, but at that point, guys, I would really be looking to come take out that liquidity. Oop. So you can see pulled from the absolute range lows, the 80.5K lows up to your 98K highs. Your golden pocket was tapped. The 618 was tapped at 87, 186. We tapped it. But it would be nicer to come down and actually hit the value area low and take this liquidity. But it was tapped very nicely. I mean, like almost perfectly. Money flow still looks pretty bearish here. And you did print a hidden bear div on the 4-hour on the lower high. Hidden bear div, and that's continuation pattern. So that it means that it's more likely to take out that low to continue the trend. So just be aware of that. And I do think that double 1, 2 impulse is still valid. I was about to short it at the high, but it's only for spot. Bitcoin up here, that would have been, I think that's good. And yes, Travi trades, Elliott waves can be super freaking confusing. If it's too much, just mark out your levels. Like, okay, so here's the thing. I was a successful trader and profitable before I learned Elliott waves. Elliott waves do help you get a good bias on direction and knowing when to take profits. But you can just, the main thing is, right, price action first. So mark out your naked daily points of controls, your naked points of controls, whether that's daily, monthly, weekly. Mark out your time frame horizontals like weekly, dailies, monthlies. Mark out your, order blocks are important to look at. Fair value gaps are important to look at. Just find the confluences of resistance and support. And when there's a lot of confluence somewhere, mark that level out, right? And then all you're going to be doing is, whether you know Elliott waves or not, like a lot of people didn't know Elliott waves as we were coming up into this area here, but they saw that we had daily bear divs and multiple time frames of bear div into a resistance, and they shorted. Jason doesn't know Elliott waves, but he trades fantastically because he knew that we were coming up to his resistance with bear divs on the chart. And also, he did take a long from $87,500 because he knew we were coming down to a key confluence of support with bull divs on the 2 hour and under. So take a long from there, so you don't have to know it. I do believe it helps. And I do believe some of the best traders out there, Andy, Coons, some of the best guys out there do use Elliott waves. And they said that they've benefited greatly from using them. And since they've learned them, they tend to stick with it and incorporate into their existing strategies, which is what I've done, but it's not a must. Mark, thank you so much, man, for joining. Guys, I'm out as well. I do have to get going here. Much love to you all. I will be live tomorrow, 2 p.m. Eastern Standard Time. Please come join me tomorrow. Okay, wait. Serious crypto. I can look at LTC for like 2 minutes, but I really do got to take off to pick up my kiddo. So let me check this for. All right, what I would say is we rejected from the pitchfork midline, and now we're dropping to the lower part of the band. This is pretty big support down here. And you can see on the October 10th drop, we dropped straight to the lower part, the upper part of the lower band. But we have since then lost the midline, back tested it 3 times, made new lows, higher time frame back test, and now made new lows. We're into support. I will say that we're into support right now on LTC, coming down and hitting that pitchfork band of support, getting a green dot on the daily time frame. But we are breaking. Okay, let's see, 786. Damn, yeah, you're even breaking your 786 Fibonacci. So we're probably hitting close to the 886. Where is it? Why can't I find it here? Yeah, you're even breaking your 886 Fibonacci. I mean, it is likely we could see a bounce from here, or you could see that range start to form in here at this pitchfork band, because you'll often see ranges that form in and around pitchfork bands. You might see this range form in here, but I think that you are overall going to continue lower because you've already busted through your 886, pulled from this low to this high. Another thing you could look at is your larger corrective move. We can pull a trend-based Fibonacci extinction from the highs to the lows. Oops, I'll fix that. Yeah, man, that 1-to-1 Fibonacci extinction at $58. So that would look really nice. And remember, we were looking for something similar on SUI or ADA. I can't remember, but if this is going to be a larger 3-wave corrective move and you're just pretty much trading the range, right? Your bottoming range, coming down and hitting that 1-to-1, and then you might be able to see a nice push up from here. But you're probably going to chop. So you're in this pitchfork band on low time frames. You can already see we're starting to form a range inside that pitchfork band. Bounce from the bottom, come up to the top, reject the top, come down to the bottom, bounce from the bottom, come up to the top, reject the top. Now we're coming down to our local golden pocket area, but I would say you're probably going to chop in here for a bit. But overall, and you might even break out of it and back test it. So you could watch for a breakout and a back test and then come up to take out these highs. That's what would happen. But overall, I think on higher time frames, it's likely that we are probably going to drop to $58 to like $56, $7, $58 to $57. And that would be a pretty nice level to look for some longs. Your value area lows close by. Okay, guys, thank you so much for being here. I do got to get going. I'll be live tomorrow, 2 p.m. Eastern Standard Time. Please hit the like button on your way out, and please come join me tomorrow. Much love to all of you.